In this video, we're going to look at 15 stocks that are between negative 10% and 10% within their 10-week moving average. We're looking at popular stocks, in my opinion. We're going to look at them on a 63-day time frame, a 63-day exponential time frame. We'll use the 63-day for Fibonacci retracement, and we'll look at Seeking Alpha's charts to see what the 20, 50, and 200-day moving averages look like versus the stock price, as well as the MACD. We're using year-to-date MACD. I'll try to get through these quick. I'm going to start with AVGO, and we'll just work our way down. These headers are pretty self-explanatory, so you know what's going on here. This is Sunday morning, so this was, the close from the previous close was Thursday, and then Friday's close, was it up or not? And then the Friday open, and then previous close, we have beta. The previous close to open, we have 30-day average volume, and then the volume on Friday. We're just going to look at one chart here, the daily, and we'll look at the moving average screen. I'll explain that really quick in a minute here. When we go to Broadcom, we can see that the 20, 50, and 200 day are in the right order. This is our 20 day, this is our 50 day, our 200 day. This is our MACD. It is closed below the single line, but above the zero line here. And that is a daily MACD year to date. Our moving average screen, everything here has to be in perfect order. The price has to be above all the moving averages to get a buy. If not, we get a sell. The price has to be above the 10 week. The 10 week has to be above the 30 and 40 week for us to get a buy. If not, we get a sell. And then if all those things are correct, we get a buy. When we go to the daily moving average, we're just going to go down. We're going to look at Fibonacci. We're at 45% level. We have been, that's about the highest we've been. We were at 47% the previous day since 1017, because I have this charted going back to 1017. We have 0.99 beta and 85% alpha on the market. We're at the 41 RSI. The way I interpret this is we're going to change this to the 63 exponential. The Fibonacci's linked to this number. I won't get Fibonacci when I have the 63E. That's why I have to change this each time. We have been above the 63 exponential moving average for Broadcom, going all the way back, and we can look at the historical percentages. Now these here are different than what I was showing you in the moving average screen, where these all have to be in perfect order. These do not. If the price is above the 21 day, we get a buy. If the 21 day is above the 63 day, we get a buy. If the 63 day is above the 189 day, we get a buy. If any of those things are not true, then we get a sell. These are the percentages above or below the 63-day moving exponential moving average, because that's what table we're looking at here. And then we have the most recent date going backwards. So you can see the highest percentages that it's gotten above. Broadcom has been as high as about, 28% here. And right now we're only a percentage point above it. And we've been above it ever since 424. So that's what we're going to do for each stock. That was Broadcom. Now we'll go on to our next stock. Okay, now we have CrowdStrike. We can see this is in an uptrend, 20, 50, 200 day. Our MACD is broken down. If we go to our moving average, everything is in perfect order here. Our daily moving average, we're going to go down and look at Fibonacci first. We're at the 13% level. And for CrowdStrike, the last time we were pretty low was 25%. This is a strong stock that's staying strong and moving up. We're going to change this to our exponential moving average. We're above our 63-day exponential moving average, 7.73%. We have accumulation. These are ATR stop losses. You can use these as percentages. This is your ATR. ATR 1.5 times, 2 times, and then 2.5 times, and then the percentages. That over to the right a little bit so you can see. And then this is the amount. So if you wanted to put an 8.37% stop loss, it would be 492.56 for CrowdStrike. We have 1.17 beta, 32% of alpha, and 53 RSI. We already did the Fibonacci. We go over to the right here. We'll just look historically. We're at 7.73%. We can see historically we stayed above that since 9/15. So this has really just started its uptrend, and we've got as high as 13% above the 21-day or the 63-day exponential moving average, and it looks like that's about the highest. So that's it for CrowdStrike. The next stock is going to be Google. You can see we're in a strong uptrend here. We closed above our 20-day. Our MACD did break down. If we look at the chart here, the table here, we are in a perfect uptrend on our daily moving averages. We go down to our Fibonacci retracement. We're at the 16% level, and Google has also been a very strong stock because we have not seen it pull back this much. This is the most since 1017 that it has pulled back is 16% on Fibonacci, and that's on a 63-day time frame because I have it linked to whatever time frame I'm looking at here. So if we change this to the 63 exponential moving average, we are above this 10.89%. We have accumulation, 1.05 beta, 35% of alpha. We go over here to the right. We're about 10.8. We know we're 10.89% above, and we kind of been 10% or more, double digits percentages above for quite a while now, since 1015. We'd have to go all the way back to, these are very small breakdowns below the moving average. I would not be stopped out on these if I'm trying to trade this moving average. We'd have to go back to 514 when we went above it. And you could have bought this when you went above this at 514, 165, and today it trades for 276. So just pullbacks to this moving average, it's respecting this moving average. And that's why we're looking at these, because all these stocks seem to be respecting these moving averages. Some have broken down slightly. Okay, our next one is going to be Robinhood, and we can see this is in the right uptrend. We are pulling back. Our 20 is pulling back to our 50. Our MACD is broken down below the single line. Our Fibonacci is at 58% on the 63-day time frame. It was 59% on 11/13. We have not seen a percentage that high yet since 1017. So this is in the golden zone. We are in distribution at -5 below the zero line on the chicken money flow. 2.42 beta, but we do have 203% of alpha for Robinhood, and it's at the 34.46 level for RSI. The way I interpret RSI is anything above 50 is bullish, anything below 50 is bearish. As you can see here, why I mark it red or green based on that. And we have fallen below. Actually, let's change this to our exponential moving average because that's what we're looking at. We're looking at our 63-day exponential moving average. We have fallen below. 3.88% was the lowest we've been below it since we broke out above it back on 423. So this could be an opportunity for Robinhood, or it could be, it's up. You never know. The stock market might break down and start. The next levels these will test would be the 189-day moving average or the 30 and 40-week moving averages. Probably the 150-day, the 30 and 30-week moving average. Okay, the next stock we're going to look at is IBM. Right here we went into the right order: 20, 50, 200-day. We're above the 20-day. We have a MACD that is breaking down from looks like a high level here, maybe even like a little double top on the MACD. Everything is in a perfect uptrend. If we go to the daily time frame, the 63-day on a Fibonacci retracement, we're only at 12%. This is only, we have to go all the way back to 1017, the time we have furthest back for Fibonacci, and that's at 21%. That's the highest level. So the stock has been in a pretty strong recent uptrend, very recent. We have accumulation. We're at 0.7 beta, 31% of alpha on the market over 12 months. This is. And then, this is just a quant score based on return on equity, cash flow, things like that I come up with. And that's me putting my own metrics in. So, take that with a grain of salt. So we're 7% above our 63 exponential moving average. And this has only been above our 63 exponential for a short time now, since the beginning of September here. But we have held it since then. And right now we're 7% above. So that's IBM. Our next stock will be Newmont, and we can see we're in an uptrend with the 20, 50, and 200-day. However, the 20-day has pulled back to the 50-day, but it has not crossed yet. We do have open MACD, so that's bullish. We have a perfect uptrend. We're looking at our 63-day Fibonacci. It's at the 33% level. We've been as high as the 58.96% level here on 11.4. That could have been an opportunity That's the golden zone, and I'll show you what I mean by that. We'll go to when we look at the chart on the table over here to the right. 11.4 just fell to 58.96%, and if this gets to 65-70%, that gets scary, and you probably want to get out. But 58.9% could be an opportunity, and I'll show you what I mean here in a minute. We're in accumulation, 0.31 beta, 97% of alpha, quant score 88.67 based on my metrics. RSI is strong, and if we'll change this to the exponential moving average, but it won't be too much different here. You can see that we're 8.46% above this, and this is probably 11.4, where it would have been an opportunity. Let's look here. 11.4 would have been 78.90. That's when we went to the 58 level on Fibonacci. We could have bought this on 11.4 and wrote it up to $93. And we've just crossed back above the 50 RSI, so this is when we pull back and find support or cross it, that is bullish for this 50 RSI. And this has been, as far as the exponential moving average, we have to go all the way back to really 1 or 2% is nothing, even 3.34%. Maybe we go back to January for this stock. January, when we went above this, would have been a good buying opportunity. And you could wait a few days, to make sure that it's going to stay above it and buy it at 43 or 44 or 45. And there's pullbacks, and you could add to it on those pullbacks if you wanted to, or you could just wait. But you shouldn't get stopped out on 3.5%, like if you're buying it near that moving average and trading that moving average. And then you would have rode this all the way up to, at one point, $98. So that's it for Newmont. That's a gold stock. Okay, our next one is going to be NVIDIA. We're in an uptrend, 20, 50, 200 day. Our MACD is closed. If we go to NVIDIA, we have our 21 day is off with the price, but everything else is in the right order. We go down to Fibonacci Retracement. We're at the 42% level on Thursday, 11/13. We were at the 50% level. We haven't seen levels the 50% level. We have not seen 36%, 48% back here. So this has been pulling back some. We do still have accumulation, 2.11 beta. We don't have alpha on the market. And when I say the market, I'm talking about the NASDAQ, not the SPY. We're looking at the Qs. So the Qs have outperformed NVIDIA over the last 12 months based on this. Actually, that's not necessarily outperformance. When we're looking at alpha, we're comparing it to taking a risk-free interest rate versus buying a stock versus buying an index and comparing it to a risk-free interest rate of AAA bonds. So if we look at 63 exponential moving average, we are above that, and we've held that for quite some time. We are just below the 50 RSI. And then if we go over here for the 63 for NVIDIA, we are historically, we'd have to go all the way back to 5.7. We crossed that, and we've stayed above it ever since. So if you would have bought this anywhere around here, you'd made quite a bit of money. Pullbacks are looking like opportunities for this at the 63-day level. And right now we are at the 3.63 exponential moving average. We're only 3.43% above it. Okay, the next stock is going to be Open Door. You can see our 20-day is below our 50-day, but it looks like it is trying to trend back up. We do have an open MACD that can be bullish for Open Door. This is a wild stock, right? Because 10 weeks is really 50 days, right? 10 weeks is 50 days. It's the same thing. We're just using Friday closing prices, and we're 0.61% above the 10-week. All of our signals are a buy here, and I'm going to show you what I mean here in a second. We're 12% above our 63-day, which is really about the same time frame, a little more, but not much different. And we're almost 13% above our 63-day time frame. As far as Fibonacci goes, we're at 32% on the 63-day time frame. It's been around there, or a little more, or a little less around that area. We're in accumulation at 10.9. We have 3.56 beta, 337% of alpha. We're right below the 50 RSI. These are our stop loss percentages here that you can use, and then the prices. Pull that over just a tad. And then we'll look at our 63 exponential moving average. We're 20% above our, see, that's wild. We're 0.6% above or whatever, what was it, 0.61% above our 10-week moving average. Our daily moving average, our smooth moving average, we were 13% above, and our exponential moving average we're 20% above. But you can see it holds this exponential moving average. What an opportunity right here to buy this stock, right? Right in this level here, we were at, if I can, 656. That would have been a great entry price to ride it up to 937, even if you got stopped out or sold a third of your position or half of your position and then got stopped out here to take some profits. Now, if we look at the percentage above or below the 63 exponential moving average, we've been above that for quite some time now, and that's been since July. Now, there was a point where we were 243% above this moving average. And I think that's the highest one. Now, are we going to get that high above that moving average again? I don't know. Because this is volatile, I might wait for the opportunity where it pulls back to this moving average again. Even if the moving average moves up and it pulls back some, or I wait, or it just stays at 812. But I don't think this stays at 812. This is either going to go up or down because it's just a volatile stock. So it's a trader stock. So open door, that's open door. Okay, the next stock is going to be Palantir. We're in an uptrend. We have pulled back below our 50-day moving average. We have a bearish MACD, but it looks like we're just below that zero line with our MACD. We are a sell on our short-term time frames and our mid-term time frames, but our longer-term time frames, we are a buy. If we go to our daily chart here and we go down to Fibonacci, we are at the 61.35% level, which is the golden zone. This was concerning, but we did pivot back into the golden zone, so this could be creating a great opportunity to get into Palantir. We haven't seen it at this level. It was at 59.42% on 11.6. We are in accumulation, 2.63 beta, 133% of alpha over the last 12 months for SECUs, 42.46 RSI. Now, if we change this to our 63 exponential moving average, we also, these are ATR stop losses you could use based on each time frame. You want to take a quick look at those. So we're just below our 63-day exponential moving average, but if we look at this historically, what an opportunity, right? We have to go back to April 9th. We went above this. And we were below it here, but even, there was, if you were a position trader and you were trading the 100, I mean, if we go way, way back, I don't have it plotted past this over a year. We could have bought this a year ago at $36. We've stayed above this moving average ever since. There's pullbacks, but these pullbacks are opportunities. And is it going to change now? Maybe. I mean, is the story over for Palantir? I mean, if that's what you think, maybe. I don't think so, but if you believe that, that's what you believe. So this looks like an opportunity to me. That's what I got for Palantir. We'll go on to the next stock. Okay, our next stock is going to be POWL. We're in an uptrend. This has fallen below its 50-day, but the 20, 50, and 200 in right order. Our MACD is closed below the single line. That's bearish. We just have our 21-day that's off of our price, but everything else is in the right order. If we look at the Fibonacci on the 63-day time frame, we're at the 48% level, 49% the day before. We haven't seen levels like that since over the last several weeks. We have accumulation. We have a beta of 0.81. We do not have alpha on the Qs. These would be our stop losses if we were using ATR stop losses. They're just guidance, not recommendations. Do what you do, and then we change this to our exponential moving average. We are above our 63-day exponential moving average and staying above it, and it's been above that. And the reason I scroll down so you can look at the percentages, so you can get an idea of what kind of upside you have here. So just pause the video as I scroll down. Like, this was 37% above its on 1029, above its 63-day exponential moving average, and right now it's 3%. So if we can get back to even half of that, there's some upside here. But we have to go back to, this is a very small breakdown. We'll say 6.6. We crossed this, and we should have been in this from 6.6 on. You know, in 6/6 when we crossed it, we were at 190, and now we're at 329, and it's acting as support for these stocks. Okay, 5 more stocks to get through. If you're still with me, the Ralph Lauren, SoFi, Seagate Technologies, Taiwan Semiconductor, and Vertiv Holdings. Uh, Consider hitting that like and subscribe button if you're still with me. That's pretty good. I don't even want to listen. I don't even want to talk anymore, let alone you probably wanting to listen to me talk. No, I'm just kidding. All right, so we cross on the MACD. Our 20, 50, and 200 days are in the right order. We're above our 20. Looks like we're above our 20-day here. Everything's in the right order except for the 21 day versus the price. If we go to the daily time frame, we're on the 63 Fibonacci. We're at the 48% level. We were at 49% level on Thursday. We can go all the way back. We really haven't seen levels this high. We're in accumulation at 17.2. I don't know difference. Oh, I haven't changed my stock. Okay, we're looking at Ralph Lauren. Mistake there. All right, everything's in a perfect order. And if we go to the daily time frame, the 63 day, our Fibonacci is 15%. Yeah, we've been as high as 52%, and that was back on 11.4. And we are in distribution here, and we have a 1.61 beta, but we do have alpha on the market. We change this to our exponential moving average. We can just look at this chart here in our uptrend. We go over here to the right and look at our historical percentages. And what the Fibonacci was on 11.4, so that was 309 when we were at like that 50% level. That's why we use this Fibonacci with the 63 day, because that would have been a great opportunity, right? If we'd have bought this on 11.4, it was 309, so we fell just below that 63 day, but we were still, you know, in a golden zone area, close to the golden zone for the Fibonacci, and we could have bought this at 309 and rode it in a few days up to 340. I did not do that, but that's something you could have done. And right now we're at about 5% above the 63-day exponential moving average. And this is not a very volatile stock. It's just a smooth mover. You know, so if you don't like volatility, this might be one for you. We go back to 5.2, and we were above. That's when we went above that 63-day exponential moving average. Okay, SoFi is going to be our next stock. We are in an uptrend. 20, 50, and 200 day are in the right order. Our MACD is closed below the single line. Our 21 day is the only thing that's off of our price. Everything else is bullish or buy signal. Our 63 day Fibonacci retracement, we're at the 45% level. We were at the 48% level on 11.6. Now, when I just went through Ralph Lauren and told you that was a good area to buy, let's look at why I think that SoFi might be a good buy, because we're at the 45% level. It doesn't mean it won't go down a little more to the 50 or the 52 or 53% level. We are in accumulation. We have 61% of alpha. It's almost 2 times beta with a 44.60 RSI. These are stop loss percentage opportunities based on ATR and what they are for the amounts. You can see right now, like every time we touch this 63 day moving average is an opportunity, but we're actually going to look at the exponential moving average. Every time we come back to this exponential moving average, it's an opportunity. I would actually consider this a double bottom. They don't have to be perfect double bottoms, like they don't have to be the perfect price. I actually like double bottoms based on the moving average, when it hits the moving average twice and then bounces. Now, if it hits 3, 4, or 5 times, you know, the more time, just like when we hit the ceiling and we bust through, the more times we hit the bottom, we could be busting through. But 2 times is not too bad. And what I meant by bust through to the downside, I actually don't think that's going to happen, but that's why we use stop losses just in case it does happen. You know, we're only 2.91% above our 63-day exponential moving average, and you can see we've been in the 20s, maybe even 30 at one point. Yeah, 31.40% here, 38%, 39% here above that 63-day exponential moving average. So there is a lot of opportunity here if this turns and starts to trend back up. We went above it right around the end of April. That's it for SoFi. Okay, the next stock we're going to look at is Seagate Technologies. We have 20, 50, 200 day in the right order. We did just cross to the bearish side on our MACD. Everything is in the right order here for the buy signals, for all the moving averages and price. And then if we look at the daily, We go down to the Fibonacci first. We are at the 25% level. We have gotten as high as the 38% level back here on 1020, and that's the highest it's been. Right now we're at the 25% level. We're above the 50 RSI. We have alpha 133%, 1.63 beta, and it's in accumulation. These are your guide for stop losses for ATR percentages, and then those prices. The ATR 1.5, 2, and 2.5 times. If we go back up here and move this to our exponential moving average, the 63-day, we can see we're about 15% above that. Now historically, we've been in double digits above that for a while now. Even here it was only, just below 10%. And we'd have to go back, besides that one, those ones that were just around 9% that were below 10%. We got to go all the way back to May 6th. So this is a very strong, or actually May 9th it looks like here. I may have missed one, but really this is a strong stock that's basically since April or the beginning of May has been double-digit percentages above its 63-day exponential moving averages. So even though this isn't fallen all the way back towards moving average, it still may be an opportunity based on, you may want to see if this falls back to like the 10% above its moving average, and this moving average is moving up, so it's going to catch up to this price because as time goes on, these move up. So that's it for Seagate. Okay, the next stock we'll look at is Taiwan Semiconductor. We can see that the moving averages are in right order. The MACD is broken down, but it's still above that zero line on the daily time frame year to date. Our 21-day is off against our price, but everything else is in the right order. If we look at the daily moving average here for the Fibonacci retracement, we're at the 63-day. We're at the 26% level. The day before, we were at the 29.44% level, and that's the highest it's been for Taiwan Semiconductor over the last couple weeks. We are in distribution. This has a 1.29 beta, but it does have alpha on the market. If we go over here to the right, actually let's change this to the exponential moving average, the 63-day exponential moving average. We've been holding that. Any pullbacks have been opportunities. Is this one an opportunity, or is it going to break down? That remains to be seen, but I like to look at them as opportunities until they no longer are. Right now it is an opportunity. We're only 2.84% above our moving average, and historically we've been as high as 20%, and that's about the highest we've gotten above at 20%, and we've been above this since about 4:30, but beginning of May. Beginning of May we went above our 63-day exponential moving average and have stayed above it since then. So that's it for Taiwan Semiconductor. Okay, last stock we're going to look at, and thank you for being here this long if you have been here this long. We are in the right trend, 20, 50, and 200-day. Our MACD is closed. If the 21-day is off against the price, if we go to the daily moving average, the 63-day, everything else was in the right order. The 63-day is at the 36.54% level. It was at the 46% level the day before. But it's really just pulling back here because you can see, if we go back to 1016, 1017, we were not that far below the, this was in a strong uptrend. Now we're getting a pullback. We are in distribution, 1.87 beta, just slight alpha on the market, RSI. These are your ATR stop loss percentages. Just pull this over to the right just a tad so you can see. Change this to the 63-day exponential moving average, and you can see when we hit that, we bounced right off of it. We pivoted. So this is really like a pivot point, right? These moving averages, all they are is just telling us a story, and that's a pivot point. For Vertiv Holdings, pivoted right off of that. It's 5.67% above it, and this could be a good opportunity if you get any pullback at all throughout the day, where we're only 2 or 3% above it. That might be an opportunity to take a position. This would have been a great opportunity at 1.33%. You could have made 4% in a day. But historically, you can see this has been as high as almost 30% right here, not quite. And we've been, we had some breakdowns, but we've been above this since about May. We had a little bit of breakdown here, but nothing too concerning, just a few percentage points. So that's all I got for you. That's this whole video. I wanted to get through 15 stocks that I thought were popular stocks that were within -10 to -20% of its 10-week moving average, and you can see how the 10-week, the 63-day, and the 63-day exponential moving averages all are different from one another a little bit, even though they're close in time frames, the 10-week and the 63-day. I hope that video was helpful. That's to help you get an idea of strong stocks that may have support and be moving higher from here, even though the market seems scary right now. I hope that video was helpful. If it was, consider hitting the like and subscribe button, and thank you for watching.